Hello, welcome to class, and this is the second module. And here we'll be talking about the professional ethics and standard in auditing. The professional ethics and standard in, and we will look into having an understanding of the five fundamental ethical principles. We'll identify the threats to independence and objectivity. We'll also look at how we need to apply appropriate safeguard to mitigate ethical threats, and lastly, to navigate ethical dilemmas using a structured why ethics matter in auditing. When we talk about ethics, they are the cornerstone of trust. They are the cornerstone of trust. And the society's trust in auditor depends on adherence to the highest ethical standard. And it goes beyond compliance. It's a mindset of integrity and commitment to the public interest. And it is actually critical because auditor access confidential information. They also exercise significant professional judgment, and lastly influence stakeholders' decision. So ethical failure is equal to loss of credibility and public trust, and that is why we need to take this aspect of the course serious, the ethics in audit. And the five fundamental principles are one, integrity; two, objectivity; three, professional competence and due care; four, confidentiality; and five, professional behavior. When we talk about integrity, it is to be straightforward, honest, fair in all relationships, and it's do not associate with misleading information. It is when an auditor do not associate with misleading information. Talking about objectivity, it is avoiding bias, conflict of interest, or undue influences, and it's in doing this there is a maintenance of impartiality in professional judgment. And for the professional competence and due care, it is attaining and maintaining knowledge and skill. Attaining and maintaining knowledge and skill. And it's also acting diligently according to the standards, and it requires continuous learning. It requires continuous learning. You can't just say you are practicing while you do not actually try to attain or maintain the knowledge and increase or ensure continuous learning to meet up with the standard as it gets updated. And we also have the confidentiality principle, which deals with respect and protection of clients' information. And the auditor can only disclose can disclose only with proper authority or legal duty. And the last is professional behavior, and it is complying with laws and regulation and trying to avoid conduct that discredits the pro. When we talk about independence, just like we deal with it or we said in um, the first module, independence, it's actually the hallmark of auditing, and it's actually comprised of two essential components. The first is independence of the mind, which is in fact, and independence in appearance. Looking at independence of mind, which is known as in fact, it is actually the state of mind that permits an objective, unbiased opinion, and it actually deals with the internal aspect, and it includes integrity, skepticism, no compromising influence. And for the independence in appearance, it's actually the avoidance of circumstances that would cause a reasonable third party to doubt objectivity. And for this, it's actually the aspect of the external, which deals with perceptions matters. Also, relationship and financial interest are very, very important when we talk about independence in appearance. And these two components are actually critical. They are both critical, and you can be independent in fact but fail in appearance, undermining the trust. So you have to make use of these two in the practice. And we also have 5 key traits to independence and objectivity. The first one is self-interest trait, self-interest trait. And when we talk about this, it is auditor could benefit financially, that is owing client share, fee dependency, and another is self-review traits, talking about auditing one's own prior work, that is preparing financial statement and auditing them. An auditor who performs the work of preparation of financial statements and actually still have to audit it, it's actually a trait, self-review trait. And we also have the advocacy trait, that is promoting the client's position to the point of compromised objectivity. Example is acting as legal advocates. And we also have the familiarity traits. This talks about close or long-standing relationship which reduces skepticism. And this deals with example of family ties, long association. And the last is the intimidation trait. And it's actually the actual or perceived pressure from clients. And this comes with a threat of dismissal over a we have the um, we have the categories of safeguarding categories of safeguarding. And when we talk about this, when threats are identified, you need to apply safeguards to eliminate or reduce to an acceptable level. And in talking about this, we have a first category, which is safeguards created by professional legislation. And this deals with education and CPD requirements, professional standard and monitoring, external review, and independent um, oversight bodies. We also have the safeguard in the work environment, which deals with firm level, and these include the strong tone at the top emphasizing ethics, documented independence policy, client acceptance or continuance procedure, and rotation of senior personnel. And we also have the third one, which is engagement specific safeguard, and this deals with independent partner review, consultation with third parties, um, disclosure to those charged with governance, and the ultimate safeguard, which is declining or resigning from the. We have the ethical do and don'ts in auditing. And for the essential do's, the first is to maintain independence in terms of fact and in terms of appearance. You have to maintain independence. Another is to exercise professional skepticism. Another is to document all significant matters. Another that an auditor have to do is to communicate openly with governance. And another do is maintaining confidentiality, and lastly, stay current with developments. And the critical don'ts that must be avoided when we talk about auditing is one, accepting of gifts or inducement from clients, letting commercial pressure override judgment, performing management function for the clients, disclosure of confidential information without authority, allowing familiarity to reduce skepticism, and lastly, continuing if independence is a structured ethical decision-making framework. Yeah, and this is actually a step-by-step approach when facing dilemmas. And the first one is to establish the facts in terms of who, what, when, and where. It's and the second one is to identify the ethical issue, and looking at it from which principle are at stake in this kind of dilemma, in this kind of um, dilemma. Yes, dilemma. And the third one is identifying relevant norms and principles in terms of code, laws, value. And the fourth one is to identify alternative course of action. And the fifth is to evaluate alternative against principles and consequences. And then you make and implement the decision, which requires courage. And lastly is to reflect on the outcome, that is learning and improving. And it actually guides judgment when codes alone are insufficient. Looking at a case study, a scenario uh, where we have Stanley Manufacturing with a long association of the auditor, 8 years audit, close partner CFO relationship, and he gives complimentary ticket value $2,000. A financial dependence non-audit fee is equal to 30% of total fee from clients, and family connection, partner's son has internship arranged by the CFO. Let's identify the threats from this. The first one is familiarity threats. And when we talk about this, it's actually the close relationship which actually reduce skepticism, just like I've been saying. Another is the self-interest threat in terms of gifts of $2,000 and a significant fee dependency of 30% of total fee from clients. And another is the intimidation threat, which is um, potential pressure due to family link, potential pressure due to link. And let's apply safeguard and making decision. Applying safeguard and making decision in this kind of scenario, you have to recommend safeguard for the case. And the first is rotation of the engagement partner in terms of um, to address the familiarity issue. The second is to decline the gifts and reinforce firm gift policy, which addresses the self-interest. Another is to review fee dependency and consider reducing non-audit service, which addresses the aspect of self-interest. And the last is to disclose all matters to audit committee, and this brings about an enhanced transparency in the process of auditing. And the ethical decision to be made is using the framework. The firm likely cannot continue with significant changes if safeguards like partner rotation and fee reduction are not feasible or sufficient. The ultimate safeguard is to resign from the engagement to protect independence and trust. In conclusion, ethics are non-negotiable. They underpin public trust, and the five fundamental principles we've looked at guides all professional conduct. And independence in fact and appearance is the profession's hallmark. Also, identifying threat proactively and applying appropriate safeguard is very, very important. There is need to use a structured decision-making framework to resolve dilemmas, and technical skill plus ethical commitment brings about professional excellence. Ethical judgment is as critical as technical competence, and it is very important in auditing. Thank you.